Good and welcome guys, it's Monaco Daniel. In this video, I'm going to be looking at candlestick analysis. Recently, I've had a lot of people from my Telegram channel as well as from some other groups I interact with come to my DM and ask me questions about technical analysis, about my approach to trading and technical analysis, as well as how to get started as technical analysts or traders. And I find these questions quite fascinating. I find them quite interesting. But I definitely can't reply to everyone coming into my DM to ask questions about trading and technical analysis, as well as how to understand the charts I post in my Telegram channel. So I thought to use this medium as a means to break down this whole thing about technical analysis for those who are new to technical analysis, as well as to explain my own supply and demand trading method using my YouTube channel. So that's basically what I'm going to be doing. Now, I conducted a poll in my Telegram channel some days ago, which revealed that a lot of people in the channel are probably still new to trading or don't understand the entire concept of trading candlesticks as well as any financial market. So I took it upon myself that I'm going to be making regular educating videos, maybe once a week or twice a week, to explain certain concepts about technical analysis in detail, step-by-step concepts, until we get to supply and demand trading system, which is what I trade, which is what I've been trading all along. Yeah, so I decided I'll be doing this video on candlesticks because it's totally impossible, or let me say very difficult, maybe not impossible, but it's going to be very difficult to understand the concept of trading any financial markets, to understand the concept of analyzing charts without first having to understand what candlesticks are about, as well as what makes up a candlestick. Yeah, and since from the poll in the Telegram channel it shows that we have a lot of new people to trading, I decided to make this video to get us started. I'll be posting educational videos every weekend, so you might want to like and subscribe to the video and subscribe to the YouTube channel for more exciting videos, as well as leave a comment below if there's any question or any contribution you would like to make concerning this video. I'm going to personally attend to every comment that is left for any of my videos. Now, like I said earlier, I post my setups, my trade setups, as well as market insight on the cryptocurrency markets in my Telegram channel, which I'm going to be leaving a link below on the description for this video. You can check out my Telegram channel if you are a cryptocurrency trader or you want to get an insight about the cryptocurrency market. But in all, you can use this basic concept of candlestick analysis for any financial market, be it the crypto, the forex, as well as any other market. So without having to take too much of our time, let me head straight to why we are here today. What is candlesticks? What is candlestick? You most times you pull up your chart, maybe you open TradingView app on your phone or something, and then you see charts pattern and all of this. But when you zoom closer, you come to realize that these charts, the bigger picture you are seeing, is made up of little candlesticks. So what are candlesticks? Candlestick represents price movements of a particular asset over a given period of time. It's as simple as that. Candlesticks basically represents the price movement of a particular asset over a given period of time. So let's take gold or Bitcoin or silver or even local currencies like dollar, euro, pounds, or any financial asset, any liquid market, for example. Candlesticks basically represent the movement of price of that asset over a given period of time. And this time frame could range from as low as 1 minute to 5 minutes to 10, 15, 20, 30 minutes, or even as high as weekly, monthly, or even yearly candlesticks. So basically, candlestick represents price movement over a given period of time, and it could be any period of time. Yeah. Generally, there are two types of candlesticks. When it comes to analyzing any financial market, there are basically two types of candlestick, which is the bullish candlestick, which is represented here in green, as well as the bearish candlestick represented here in red. It could be in whichever color you want it to be. You could set your charts to be in whichever color you want it to be. But I usually love mine in green and red. That is more like the default settings when it comes to technical analysis. I just love mine in green and red. Yeah. So candlesticks are generally made up of two things: the body, which is this whole part we are seeing here, as well as the wick. It is the same thing with the bearish candle. We have the body and then we have the wick. Now, in the case of a bullish candlestick, the body represents the opening and closing price of that particular asset over the time period under consideration. Bullish candlestick generally represents upward price movement over a given period of time. So if we are looking at the price of Bitcoin, for example, or gold, for example, if we are looking at a 1 hour candlestick, then what it basically tells us is the closing price for the last 1 hour is higher than the opening price for the 1 hour period. It's as simple as that. So a bullish candlestick represents upward price movements over a given period of time, while on the contrary, a bearish candlestick represents downward price movements over a given period of time. A bearish candlestick for Bitcoin or gold or any liquid asset basically tells you that for the time period under consideration, the price of this asset went down. We had a downtrend. We had a downward movement in the price of this asset. Now, like I said, the body of a bullish candlestick is made up of the open and the close. The opening price is the price for which the particular asset we are looking at opened the trading period. Could be a 1 hour, could be daily, could be whichever time frame you want it to be. But the opening price is the price at which that asset started the trading period with. While we have the closing price to be the price that the particular asset ended the trading period with. So if we are looking at a 1 hour trading period for Bitcoin, for example, and then let's say the price of Bitcoin opened the 1 hour period at the price of $40,000 per Bitcoin, and then closed the one hour period at the price of $44,000 per Bitcoin, then $40,000 is going to be the opening price, while 44 will be the closing price. And by mere logic, you could tell that the price of Bitcoin went high within the period under consideration. So open is the price we started the period with, close is the price we ended the period with. While we have the high to be the highest point that the price of Bitcoin in this case got to within the period under consideration. So if we add the price of Bitcoin, let's say closing at $44,000, but within the 1 hour period or whichever period you choose for yourself, within that period, if we add the price of Bitcoin going as high as $46,000 before coming to close the period at $44,000, then we are going to be having $46,000 as the high, which is the highest point that the price of Bitcoin got to. And then if within that period, for some reasons, the price of Bitcoin came down to, let's say, $38,000 before closing up higher, then 38 is going to be the low, it is the lowest point that the price of Bitcoin got to within the time frame under consideration. So that is it for a bullish candlestick. Why A bearish candlestick is quite similar to a bullish candlestick, in the case that we have the high, which is the highest point that price got to within the period under consideration, while we have the low to be the lowest point the price got to within the period under consideration. And it is absolutely the same as it is with a bullish candlestick. If the price of Bitcoin for, let's say, the last 1 hour now opened at $44,000, and then at some point in time within the last 1 hour it went as high as 46 before coming down to close at 40, then we are going to be having 46 to be the high for Bitcoin within the last 1 hour, which is the highest point that the price of Bitcoin got to, and then 44 to be the opening price for Bitcoin within the time frame, and then 40 to be the closing price. But if within that period of time the price of Bitcoin went as low as, let's say, 38, then we'll be having a low as 38, our close to be 40, and then our opening to be 44 with a high of 46. It is as simple as that. Bullish candlestick representing upward price movement, bearish candlestick representing downward price movement, and in both cases candlesticks are made up of body and wicks, where the body is defined by the open and the close, and then the wick is defined by the highs and the lows of the candlestick. Now, before I round up the video, I want to quickly point out something, that prices doesn't just move within particular time frame. Prices doesn't just go up or down within a given time frame. Prices move as a result of forces of supply and demand. It is in market situation where we have more buying pressure than selling pressure, you tend to find price going up, while in market situations where you have more selling pressure than buying pressure, you tend to find prices going down. So prices don't just move in a particular direction. It is market activities of buyers and sellers at a particular point in time that move prices towards a particular direction. Yeah. So this is where I'm going to call it a day. Once again, don't forget to like the video, subscribe to the YouTube channel, as well as leave a comment below. And